Hello and welcome to another episode of Last Orders. If you enjoy our content, please like and subscribe. It helps us grow and we really do appreciate it. So, looking at the market, we'll start on the higher time frames and work our way down. BTC, monthly time frame, 2 days until the monthly candle close, and we are right at monthly resistance. When we recorded the video on Monday markets, we were looking pretty bad. It was looking quite bearish. It was looking like a big rejection candle. However, a lot can change in a week, as we have seen. So, as I say, we are right on that 29.3k monthly level. It was the bottom here in the summer of 21, a bounce point here in May 22, and is now resistance. It's basically that 30k big psychological number as well. The weekly time frame, not much we can really gather from that. We get a weekly close at the same time as the monthly close. They both close on Sunday, so that'll be quite interesting to see. But in terms of weekly candle structure, not really much we can get from that. If we go to the daily, so we had a pretty wild day on Wednesday. If we break it down to the smaller time frames, you see what was going on. So we had a rally up to 30k, consolidate for a few hours, and then a big dump at about 7 o'clock UTC. And that was based on the rumours that the government and the US government, I should say, and Mt. Gox were selling. And as you can see, big dump, huge spring, and we literally, if you take a look across, you can see we basically just went straight back to the origin of that dump level. And then we've sold off a little bit since. But yeah, mad price action. A lot of people would have got stopped out on trades in that sort of day or so. But yeah, pretty wild. So if we just zoom out a little bit, go to the daily time frame. So we broke back above 28.5k, which I was surprised about. I thought this was going to cap price, and we were going to form some sort of ugly head and shoulders. Hasn't happened. As I say, we've rallied and we are now at this monthly resistance. So all eyes really on the monthly and weekly close for me. We'll just have to see what happens with daily structure. But this 28.5k maybe not that important anymore. We'll just have to wait and see. In terms of Ethereum, it's weird because it looks quite good in terms of it's holding higher time frame supports. Yet, of course, it's looking weak against BTC, and if BTC takes a trip to the downside, then it's going to follow. But if we just take a look at ETH on its own monthly time frame, obviously we got that close last month above the 1721 monthly resistance, which had been holding for a long time. And as you can see, we have got a green candle, although a bit of a wick to the upside, but it looks like it's going to hold above 1721 for the monthly close, which is obviously good. And then looking at the weekly, we've had a nice test of 1783 and held it on the weekly as well. So higher time frame wise, ETH holding supports, which is what you want to see. However, on the bearish side of things, we did deviate this 2k level, didn't hold as support, and just closed right back underneath it. So that's not a good sign, rejecting such a big level there. And then on the daily, again, the theme continues. We're holding support at 1850 on the daily level as well. So yeah, it looks good. Yeah, I'm not really convinced because, as you can see, making a bit of a lower high. All right, that's the other thing about BTC as well. Potentially making a lower high here. We'll have to wait and see. But yeah, I'd say ETH looking weaker than BTC, potentially forming a lower high here. But as I say, on all time frames from daily, weekly, and monthly, it's holding support. So yeah, bit of an odd one. We'll have to see what the monthly close brings. But wait and see. ETH BTC, as I just mentioned, so looking fairly weak again. It was looking like we were going to rally if we go to the weekly time frame. So we deviated this 0.06 level, which looked pretty bullish for altcoins. Thought that it was going to be a bit of an alt season, but no, we just ended up making another lower high. And as you can see, it looks like we're going to break back below 0.06 again on the weekly time frame. So not looking good. Potentially the thesis that I thought was going to play out before. So before we bottomed out here, I thought we were going to come down to 0.06 daily level, as I highlighted a few weeks ago on the Monday and Friday videos. But as you can see, clear level of support and resistance in the past, and it's also the quarter range. If you take the monthly range as a full range, then the daily level here ends up being halfway between the monthly level and the weekly mid-range. So important level there. I think eventually we work our way down to the bottom of the monthly range at 0.053. And that could be caused by, if we go to Bitcoin dominance, a rally in Bitcoin dominance. So as you can see, we've got two main levels to watch out for if we do break above this 48% monthly level of resistance. So we've got this start of the leg of the move here, this consolidation late 2018, early 2019 at 52%, and then we also have this leg of the move here at 57%, which was the bottom of September 2020. So yeah, a rally in Bitcoin dominance to say 52%, then maybe we see that daily level on ETH BTC get hit at 0.06, and then a rally up to, I keep switching time frames, a rally up to 57%, maybe we get that ETH BTC range low at 0.053. So something to keep an eye on. If we do rally up to 52 and or 57% on Bitcoin dominance, then it would be a really, really good time to start looking at alt BTC pairs. I mean, they're already on the floor as it is, but yeah, they could be in for more downside. And it could be, my personal thesis, we could be looking at another 6 to 9 months of sideways downward chop for altcoins, whilst all the focus is on BTC and ETH, because altcoins really need a narrative and capital rotation for them to rally. And at the moment, that just really isn't happening. And there's no reason for people to be pumping altcoins at the moment. So I think the majority of the money is going to be staying in BTC and ETH, or just coming out of the market entirely if we see another leg down later in the year. And so yeah, we could see this Bitcoin dominance rally up higher, but what that means is opportunity. So as you can see here, when Bitcoin dominance was up at 73%, Jan 21, we saw the biggest alt season of all time. So yeah, there is definitely opportunity when you see Bitcoin dominance rising. So something to keep an eye on over the coming months, but we'll obviously keep you updated on that with these weekly videos. In terms of alts to watch then, so we went through these pairs on Monday. I said that there's looking like more downside, and it looks like that's the case so far. So ADA, as you can see, we broke out of the weekly range high, we deviated back in, and that's normally a bearish sign. As you can see, we are right at resistance here, so probably not a bad place for a short or some profit taking, some hedging, because I could easily see us working our way back down to the mid-range and maybe even the range low. So as I say, over the next 6 to 9 months, maybe we see alts, they all look very similar, they're all within ranges. They've all either failed to break out of their range highs, or they've deviated back inside, which again is a bearish pattern. So could we just see alts bounce around in these ranges for the next 6 to 9 months? Definitely a possibility. So you could get the opportunity to buy ADA again at 25-ish cents, maybe even 32 cents if we come down to the range lows, 25 cents, and the risk reward to that is absolutely huge. If we just take a quick look, if we get the even if we just go from the mid range, which is 33 cents, if you get the opportunity for that again, you're looking at back to all-time highs is 850%, so an 8x. Obviously, not financial advice, might never happen, we might not reach all-time highs again, but I think the odds are pretty good for a well-established coin such as ADA. So as always, do your own research, but risk reward definitely in your favor down here in these ranges. If we take a look at Avax again, you can see it clearly marks out range. We've got the monthly level as the range low. You can see it was the bottom here in June, July 21. If we go to the weekly levels, we've got the mid-range. We just show you that there. As you can see, pretty much bang on mid-range there, and it's a clear level of weekly support and resistance all the way up until present day. So yeah, we could see this come back down to $15, or maybe even hit the range lows. Maybe you might even get sub $10 AVAX, which again, if AVAX gets back to all-time highs, again, let's just go for the mid-range. You're looking again 800-900%. If you go to the range lows and pick up a bag there, you can see how big the percentage change there is there. 1,500%, which is absolutely huge. If we do get there, as I say, next 6 to 9 months, no reason why we don't just chop around in this range. Maybe even a little deviation at the bottom of the range, and then we go. We'll have to wait and see. BNB, another one we highlighted on Monday. As you can see, deviated back into the weekly range high and a pretty bearish looking candle there. So we could easily see this come back down to the weekly mid-range level 273, which was the bottom here in 6th of March. Or maybe even the range lows down at the low 200s. Again, if we take it from the mid-range, still a pretty decent return, 150%. Obviously, BNB is number 4 in the market cap, so it's a huge market cap coin. So you're not going to get the same multiples, but what you do get with higher market cap coins is quote unquote safety. Obviously, we have seen things like Luna and stuff that were in the top 10 that have collapsed, but more often than not, the high market cap coins are generally the safest. So yeah, if you go from the range low to back up to all-time highs on BNB, still 225% return, not bad at all. And then finally Zilliqa, again same pattern, weekly time frame. This one didn't manage to break out and deviate back in. It literally just held resistance, covered it on Monday. So yeah, if you took that trade or if you took some profits, you'll be sitting pretty now. Again, no reason why over the next 6 to 9 months we can't make our way back down to the mid-range at 0.023 cents, or maybe the range lows at 0.015 cents. And again, if Zilliqa manages to get back up to all-time highs, again, there's no guarantees, but risk-reward, you're looking at from the mid-range, again, 1,000%, so 10x. And if you go to the range lows, even better, you're looking at 1,500% again. So, yeah, as I say, it all depends. A, do we get the retest of the mid-range and the range lows? And then B, if they return to their all-time highs. But again, even if they don't get back to all-time highs, the risk-reward is still there. If we go from mid-range to this swing high here at August 22, you're still looking at doubling your money. So, yeah, risk-reward is definitely there. It just requires patience. Could see a prolonged period of chop, sideways, downward action, but you will be rewarded in time. So we'll keep an eye on the Bitcoin dominance, ETH BTC, and then Alt BTC pairs throughout the rest of the year. And as I say, opportunities will present themselves. So that's it from me. We've got bank holiday on Monday, so Monday markets will be on Tuesday again. In fact, that's going to be a bit of a theme for May. Here in the UK, we have 3 bank holidays out of 5 Mondays in May this year. So there's going to be a lot of Tuesday markets coming up this month. So I'll obviously let you know. But yeah, Tuesday will be Monday markets next week. So have a good weekend. Don't spend it staring at the screen. And I will see you then. Have a good weekend.